If you're with AustralianSuper and you've never opened the PDS, this one's for you. Buried in that document is a fee example that quietly admits a member with $50,000 can lose around $11,000 over 20 years, just from paying 1% a year instead of 0.5%. AustralianSuper Personal Plan PDS. More than 3 million Australians are with this fund, and most have never aggregated what they really pay. Today, we'll make 3 moves: audit your true fee rate, check your contribution caps, and right-size your insurance. Because all 3 leaks are sitting in the fine print. Here's the headline figure they put up front. The accumulation short form PDS says a typical member is charged $50 in admin fees plus up to a maximum of $350 a year. AustralianSuper PDS 2025. But here's the part nobody tells you. That's before investment, performance and transaction costs are added on top. So we've got 3 moves today. Audit your real total fee rate, check you're under your contribution caps, and right-size your insurance cover. Each one is free and takes under 20 minutes. The first problem is layered fees that look small but scale up fast. The Personal Plan PDS lists admin fees, investment fees, and costs including a performance fee of 0.10% a year, plus transaction costs deducted from returns. AustralianSuper Personal Plan PDS. ASIC, the regulator that polices fee disclosure under RG 97, forces them to show a standard example. But the front page never adds all those layers into one real total. Watch what that does. On a $100,000 balance, total fees of 1% a year is $1,000, 2% is $2,000. AustralianSuper Personal Plan PDS. Over 20 years at 7% gross return, the gap between 1 and 2% compounds to roughly $40,000 to $50,000 in foregone retirement savings. The exact warning AustralianSuper builds into its own 2% versus 1% example. The second problem is tax. The PDS restates the ATO's contribution rules and they're easy to trip over. Before tax contributions are taxed at 15% up to a concessional cap of $30,000 a year. And if your income plus those contributions tops $250,000, the rate jumps to 30%. AustralianSuper PDS. ATO rules. Now the cost of inattention. Say you contribute $40,000 before tax in a year, $10,000 over the $30,000 cap. Leave that excess in the fund and it's taxed at 47%, which is $4,700 in 1 year. AustralianSuper PDS. ATO. Just $5,000 of excess a year for a decade adds up to about $23,500 in extra tax. Money that never compounds. Here's the myth that stops people acting. It's an industry fund, so fees and tax don't matter. It's set and forget. But AustralianSuper's own PDS warns that 2% versus 1% slashes your returns, and it spells out $30,000 caps and 47% tax on excess. AustralianSuper PDS. You still have to monitor it yourself. Put both leaks side by side. Fee drag alone can cost $40,000 to $50,000 over 20 years, AustralianSuper PDS fee example. And repeated cap breaches add roughly $23,000 in extra tax over a decade, AustralianSuper PDS ATO. Combined, a mid-career member can quietly lose $70,000 to $100,000. And here's the part nobody tells you. It's all preventable. Let me make this real. Meet Emma. She's 42. A senior marketing manager in Melbourne, earning $150,000. She has $180,000 in AustralianSuper's balanced option, with employer contributions plus $15,000 in salary sacrifice. Here's what she found in her PDS. Discovery 1 came straight from the fee table. Emma thought she paid about 0.8% based on marketing material, but adding admin, investment, and the 0.10% performance fee, her real rate was closer to 1.2%. That's $2,160 a year on her balance. AustralianSuper Personal Plan PDS. That extra 0.4 points could cost her $30,000 to $40,000 by retirement. Discovery 2 was the contribution cap. Emma's employer contributions plus her salary sacrifice already total around $30,000. Sitting right on the concessional cap, AustralianSuper PDS ATO. One bonus or pay rise pushes her over, and any excess she leaves in the fund is taxed at 47%, about $940 on a $2,000 breach. Discovery 3 was buried in the insurance section. The personal plan offers unlimited death cover, TPD up to $3 million, and income protection up to $30,000 a month. AustralianSuper personal plan PDS. Emma's default death and TPD cover was higher than she needs, costing about $510 a year net after the 15% tax benefit. Halving it saves around $255 a year. Add it all up for Emma. Over 23 years, the fee drag, the overinsurance, and the occasional cap breaches model out to an illustrative difference of $70,000 to $100,000 in her final balance, modelled at 7% PA on her PDS figures. That's not a typo, it's the price of never reading the fine print. So, could this be you? You've never actually added up your real total fee percentage. You don't know your total concessional contributions for this year. And you haven't checked your default insurance cover or what the premiums are costing you. If any of those land, the next 3 moves are exactly what you need. Now let's fix it. These 3 moves matter because each one plugs a separate leak the PDS quietly admits to. Fees, tax, and insurance. Done together, they can be worth tens of thousands by retirement, and none of them cost you a cent or takes more than 20 minutes. Move 1. Audit your total fee rate. Log into your AustralianSuper account and note your balance, then open the PDS fee summaries and list every layer. The $50 admin fee plus up to $350. The investment fees, the 0.10% performance fee. And transaction costs. Convert the dollar fees to a percentage and add them to your investment fee. Here's how, step by step. Log in and note your current balance. List the admin, investment and performance fees straight from the PDS. Then convert the fixed dollar fees to a percentage and total everything up. What good looks like. Total fees and costs at or below 1% a year. Move 2. Check your contribution caps. Log into MyGov, go to ATO online services and view your total concessional and non-concessional contributions for this financial year. Compare them against the PDS caps, $30,000 before tax and $120,000 a year after tax. This is general information, not personal advice. Step by step. Check your contributions to date in ATO online services through MyGov. Compare them to the caps, $30,000 before tax and $120,000 after tax. If you're close, cut your salary sacrifice before the 30th of June. Good looks like sitting comfortably under $30,000 concessional. Move 3. Right-size your insurance. Log in and view your current death TPD and income protection cover, along with the premiums deducted each month. Compare them to the PDS maximums, death unlimited, TPD up to $3 million, income protection up to $30,000 a month, and decide what level you genuinely need given your dependents and debts. Here's how. View your current cover levels and the premiums coming out of your super. Match the cover to your real dependents and debts, not the default maximums. Then use AustralianSuper's form to reduce any excess cover. Good looks like premiums that keep your total costs near that 1% benchmark. Why now? Between 2017 and 2019, ASIC's RG97 reforms created the standard 2% versus 1% fee example you now see in the PDS. In 2021, the PDS updated to caps of $27,500 and $110,000, plus the $250,000 income threshold. And the 2025 to 2026 PDS adopts the current $30,000 and $120,000 caps, keeping the 47% excess tax, so acting now stops repeated breaches eroding your balance. After you act, confirm it worked. You should see your total fee rate written down somewhere at or under 1%. Check that MyGov shows your contributions safely below $30,000. And if you reduced your insurance, your next statement should show a lower premium coming out. Everything here comes straight from AustralianSuper's own accumulation and personal plan PDS documents, plus the ATO's contribution and tax rules. All the links are in the description so you can read the exact pages yourself and check the figures. Today, you learned how to decode the AustralianSuper PDS, and plug 3 quiet leaks: fees, tax, and insurance. Next week, we're tackling whether your fund is actually competitive and how to use the Your Super comparison tool to find out. Hit subscribe so you don't miss it. If reading the fine print saved you even a few $100s today, do one thing for me. Subscribe, because we read these documents so you don't have to. It's free, and it's how this channel keeps fighting for your money.